Hi there, my name's Peter Farmer. I am here based in the very chilly Toronto, Canada. Super excited to be able to share with you a little bit about the Jumia story, which is a super app based in Africa. In terms of what we're going to cover today, a few key topics. One, we're going to just land on the problem statement. Really, what is it that we're trying to solve for here? A little bit about the market. Africa's fascinating. It's not like any other market in the world. A lot of really good tailwinds, but also some headwinds at the same time to consider. Talk a little bit about the different opportunities that Jumia has in front of it, but we are going to focus on one to drive a plan of action around, as well as identify some of those risks, and then wrap it up with a conclusion and just some general reflections. So really, what is the core problem that we're looking at? Is Jumia is in a tough spot. They have not been profitable for some time, in fact, in its history, and its growth is stalled. And they're seeing that in terms of GMV, which is gross merchandise volume, in terms of engagement numbers, the top line revenue growth is stalled. So they really are in a challenging position, and they are still an important leader in the market. However, they're not seeing that translate into new growth. And somewhat concerningly as well, they've recently decided to retrench from South Africa and from Tunisia as well and focus on 9 markets versus the 11 in its pursuit of profitability. So in the backdrop of needing to get to profitability, the root problem that we're trying to address here is, in order for it to expand its reach and its value proposition to both consumers and business, it needs to take another look at fintech as that enabler, as a catalyst for growth. And that's really the key problem: is for it to grow and become profitable, Jumia Pay needs to expand its fintech ecosystem. So stepping back a little bit and talking about the market as a whole, as I mentioned, Africa is a diverse and complicated place to do business in. But fortunately for Jumia, they're also in a place of immense growth and opportunity. So those tailwinds are definitely going to be supporting them in their drive to expand their digital financial services footprint from where they are today. And if you think about e-commerce in Africa, it's growing. It's being driven by a more youthful target. It's also being driven by incredible investments that are happening in certain countries. And again, that's really one of the underlying roles here. Sorry, not roles, more dynamics, I should say. That is, it's a country by country assessment. But we're starting to see that take off. People like MTN and M-Pesa, who were very much at the forefront of mobile money, have been a big driver for this. And those digital capabilities are starting to take root, and you're seeing it with more people having access to financial services and just more digital adoption as a whole. So that, combined with some of the other use cases that are getting decent traction, and you see it here on the screen, savings, remittance, and lending are also getting more traction in terms of digital use cases for financial services. And when you think about the markets themselves, what are the markets that are starting to drive that? Well, we're starting to see great traction in markets like Nigeria, South Africa, Kenya, Egypt, and Senegal. And part of the backdrop for that growth has been governments that lean into this space. And they lean into it from a regulatory point of view to create the conditions for investment, for innovation, but also most importantly, to address the operating environment for countries to do business there. One of the interesting stats here, which is fascinating, is there was 5,200 tech startups in Africa in 2024. 2,000 of those were fintech. So you're seeing a lot of really good tailwinds. Those market conditions are going to help Jumia as they need to lean into fintech to deepen their e-commerce capabilities. So where's the market going from a competitive point of view? And of course, we're looking at Jumia across all of their markets. So they had 11 by the end of 2024. They'll be down to 9. Morocco, Algeria, Egypt, Ivory Coast, Ghana, Senegal, Kenya, Uganda, and Nigeria. So those are the markets that Jumia exists in, and there's 2 key buckets of competitors to consider. One is the regional telcos, and those are the folks that you see on the screen here: M-Pesa, Orange, MTN. MTN has a couple of different offerings going on in the market. And then you have the really strong national players as well. Those are Gokada, Gozum, SafePod, and Halan. And there's countless smaller others, but these are some of the big ones. And that's really the key dynamic here: is you get the large telcos having very strong multinational presence, and then you have, but again, a narrower value proposition, I would suggest. And you have the national fintechs who sometimes can be very deep. In Egypt, for example, Halan is an incredible player, but they're focused in one country, and that gives them certain benefits, but without the reach. So when you think about the value proposition of a super app, you can tend to bifurcate the two things of non-financial versus financial services. And again, regional telcos tend to focus on financial services. That's where they came from, mobile money like we talked about before. Whereas these national players tend to be more focused on the e-commerce side and the non-financial. There's a couple of exceptions. Again, Holland, it sort of stands out in Egypt as somewhat unique, but a lot of them have ride-hailing, delivery, and shopping. And when you think about Jumia, they're in a tough spot because part of their strength is their e-commerce platform and their delivery and logistics. And they're a little bit, sorry, I shouldn't say this, but I should say that their financial services from a wallet point of view and payments is quite strong, but they are not there in lending. They're not there in P2P. They're just entered BNPL, buy now, pay later. So they're kind of getting pinched. They don't have the full non-financial, they don't have the full financial, and it's starting to constrain their growth relative to some of these competitors. So just quickly, some of the options, and again, they all have pros and cons, of course, but the path to profitability is going to require a new approach. Doing more of the same and then trying to eke out a few more points from different cost initiatives won't drive that top line growth. It will drive some bottom line for sure, and they're starting to see that in their latest results. But they need to do something new. So working from the bottom here, they have options such as becoming a pure play logistics enabler, exit B2C, exit more shopping verticals, and they've done that. They've exited coupons and ride hailing. Exit more geographies, more Tunisias and South Africas. They just exited those. They could reduce more. And then you get into the area that we're going to talk about more, enhancing their B2B proposition with alternate lending, as well as expanding financial services to consumers. Those are the areas that we think have greater traction and greater ability to transform the e-commerce footprint what they have, which is very strong, and build on that foundation to grow. So what's the plan? Here's the plan. From an overall strategic framework, we want to expand financial services to restore ecosystem growth. And when we say ecosystem growth, we mean shopping and the revenue attached to that. There will of course be new revenue coming from new financial services. However, at the end of the day, Jumia is a e-commerce platform, and we need to figure out ways for it to become rejuvenated, for lack of a better way to say it. So 4 key strategies, working left to right. 1, we want to expand on the proposition with new financial use cases that are going to feed shopping and delivery. And again, their delivery ecosystem is strong. They have 1,200 locations across their operating area. That's a competitive advantage. 2, support ecosystem with enhanced B2B capabilities and regulatory support. Alternate lending becomes an incredible trigger to bring more people onto the platform, but also as an independent offering to enable B2B to grow and become a new revenue source. Investing in the digital enablers that are required to enable these things, that are flexible and can scale to these new use cases. The tech stack can't be constrained, and there's players around the world that can help in that. And then again, expanding this fintech offering in friendly markets. So like I mentioned before, there are certain markets where you want to do this in, and also to manage cost. And leveraging the Jumia pickup stations and being hyper locally focused and go to market. These are all ways that we can build on the foundation we have, but also maintain cost control and also manage execution risk at the same time. But again, one of the strengths here is Jumia does have 2 million active users, quarterly users actually. So there's lots of momentum, there's scale, and that's something that others would kill for. So let's build on that in new financial use cases. So in terms of the actual financial use cases, I'm going to hit the high notes here. This is what's going to restore growth and fuel the ecosystem. So 1, a stored value open loop digital wallet. They have a digital wallet today. It's about making it open loop whereby you can have cash in and then cash out for different use cases. Super important to enable savings, payments, P2P, and international remittance. Expanding the payments ecosystem. Again, they're there today to a certain degree. You can always do more with payment aggregators to make sure that you have a very robust payment ecosystem. P2P payments, super important, particularly if you're sending money in country, but leveraging the Jumia Pay pickup stations as a place to do cash in, cash out. Again, another advantage that they have that others don't. Buy now, pay later, they have a partner already. which is great. Continue to do that. So again, what you're getting is a building up of one-stop shopping in the right geos. International remittance. So a lot of these countries receive a huge chunk of their GDP from other markets. So family members who've gone abroad and want to send money back. But also remittance enables, through P2P or other mechanisms, domestic remittance as well. So sending money between families. And then support cryptocurrency longer term. This, in my opinion, is more of a hedge. You need to think about what is happening from a currency evolution on the African continent. One of the things that dragged Jumia Pay's results down was negative currency fluctuations, particularly out of Egypt. So this acts as a hedge as much as anything else, but also, frankly, positions Jumia in the center of future evolution as you think about inflation and various other things that where cryptocurrency is having a stronger play. Nigeria is one of those markets that are one of the world leaders when it comes to cryptocurrency and digital currency as a whole. So again, end to end, you start to expand this capability, all of this fueling the platform, all of which fuels, frankly, e-commerce growth and leveraging the infrastructure that they've built that no one else has. So double-clicking a little bit on the next piece, which is supporting ecosystem building with enhanced B2B lending capabilities and regulatory partnership. When we think about alternate lending, we're thinking about primarily non-collateralized loans, so people who are outside of the core banking system, particularly when we think about microloans, supply chain loans, 30-day loans, things of that nature. So partnering with a lending platform, such as the ones that you see here on the right by country, give you a capability to, again, make sure you have that two-sided business model, not only consumers pulling through different merchandising revenue, but also the merchant side of things feeding it so it becomes a self-sustaining cycle. And just alternate lending as a whole, you can see some of the market numbers are substantial. 678 million in Egypt, Kenya 780, Nigeria 542. And again, what you're going to see is the same markets continue to come to the front. So in the recommendation, we're not saying be everywhere for everything. We're saying be very selective. Pick your places that have a good regulatory environment and make sure that you partner with that regulator, which is the other part here too, is a regulatory partnership is super important if you're going to be in the alternate lending business, if you're going to be in remittance, and if you're going to continue to grow the payment ecosystem at the same time. And also connected to that, of course, is partnering with other players that are doing pan-regional activities. The more that we can connect with international payments, for example, from a B2B point of view, that helps as well. So keeping an eye on the infrastructure side is important, and partnering with telcos is another way to do that as well. The next section deals with the technology stack. So, of course, Jumia has one today, but what we need to make sure that exists is in the future there's a future-proof, scalable digital capability that can grow with them, and it isn't going to constrain them. So if you think about the wallet platform, there's different providers. You can see them on the right that have also have experience delivering on the African continent, and particularly when it comes to regulatory compliance and reg tech, I believe it's called. But also they offer commercial models in an as-a-service way. This means that from a Jumia's point of view, they're only, frankly, paying as their transactions scale, and it creates a lower upfront capex pressure at the same time. AI and ML, of course, is going to be foundational, particularly if you're going to be into non-collateralized lending and other ways to provide credit scoring for businesses. This, of course, can expand into consumer, but the initial reco here is focus on the B2B side of the equation before you go into consumer so we don't bite off more than we can chew. And then the merchant lending capabilities, I think I mentioned a few times in different parts, but it's about enabling more smaller credit challenge, and I say that in a traditional sense, businesses onto the platform so that they have a path to market to sell as well and continue to feed the momentum. The next part of the recommendation is expanding the fintech offering in certain markets. So we can't be everywhere all the time. So the recommendation is let's gain scale before going everywhere, by which we mean focus on those key 4 markets initially that have positive regulatory environments, large markets, and momentum. So that's Nigeria, Kenya, Egypt, and Senegal. And again, the use cases that we're recommending to start with would be expanded payments, P2P lending, cash in, cash out, and loyalty. And make sure you have the government support to do that as well. And again, this allows you to address fragmented regulations and operational complexity. Because you're not going to be able to just flip a switch and be in all 9 markets. A measured approach, and again, there's 4 here. Maybe you start with one, with only 1 or 2 different use cases. But you want to have scalability based on the tech stack, and as well as the organization at the same time. The next piece is to leverage the Jumia footprint in terms of their pickup stations. As I mentioned earlier, there's 1,800 delivery locations in the country. Leverage that strategic advantage. It's super important. Without that, then you're just another fintech that doesn't have a sort of bricks and mortar hybrid presence. And again, it can be created or leveraged as a cash in, cash out. So when you think about international or domestic remittance, and again, it's very common in these markets, particularly with what M-Pesa has done and MTN has done as well. The cash in, cash out kiosk is a well-known thing in the region. And again, it provides access to rural and remote. So as Jumia expands its physical footprint, which is part of its strategic plan into more non-urban areas, not only is it expanding where it can ship goods to, it's expanding where it can do fintech. Last but certainly not least here is building trust with local market efforts. Culturally relevant, very tuned, similar to how WeChat did it with Singles Day in China. And you see some really good example with Mercado Pago in Latin America as well. Again, Jumia is considered to be like the African Amazon, and that brand equity of being an African company is relevant and important and a differentiator as the international players start to come in, like Alibaba and Tencent. The next part here. So, not everything's easy. So let's talk a little bit about risk mitigation. I'm just going to hit the high notes on this. The key thing to know is that we can address all of these things, as I discussed earlier, with a prioritization of the use cases. So of those myriad of different financial services use cases, focus on 2 or 3 that have the biggest yield, and a gradual market rollout. Be in markets that have regulatory friendly environments, be in markets where there's a decent Jumia Pay pickup footprint, and where there's a sizable market. So that's how we're going to primarily mitigate this risk. But of course, there's going to be risk. On the cost side, this will cost more. So how we manage that from finding the right as a service partner, but also this will probably require either additional debt and or some equity as well. Don't recommend crowdsourcing as a public company. It probably wouldn't go well, but it is definitely going to be a part of the mix. One option that they have to fund this is to exit one of those non-performing markets as well. So a little bit more focus by reducing their country footprint to focus again on those, 5 or 6 markets initially. Regulatory compliance, I think we talked a lot about. It's a critical piece of it, and they need to take a forward-friendly approach to it. And this is where consultants can play a role. You need to have the experts that have the deep insights, technical capabilities, upgrading the tech stack, making sure that an assessment is done with gaps, and making sure that we partner and or buy the right licenses to do that. Technical capabilities include, of course, people. And again, in the short term, you may need some SI assistance, system integrator assistance. And of course, talent includes training and people and things like that. And then there's the macroeconomy and geopolitical forces. Whether that's currency devaluation, whether it's political stability, these are all issues that Jumia has been dealing with for the last decade and will continue to deal with. And again, from a currency point of view, crypto can help for sure, but also it should be a criteria for which markets to invest in and which markets to exit as we consider the market rollout. So to wrap all this up, net, I think Jumia is in a great spot, but it does have to do something different if it's going to regain its profitability. They're well positioned relative to the market. They can offer more financial services, and that will fuel its core business, which frankly is e-commerce as being a super app. But again, if we take that definition of super app, their value proposition is too narrow. We want to expand on the financial services side and feed that cycle of shopping. And again, the key things, just to recall, in terms of the plan, 1 is expand the number of use cases in terms of financial services. 2, support ecosystem with more B2B, as well as partnering with the government. 3, expand the current technology stack with the right as-a-service scalable capability. And expand the fintech offering in tech-friendly market. So let's not try to be everywhere all the time, but be selective about where we are and expand over time as we gain scale and profitability. In terms of risk, it's there, but I think that from a cost point of view, the mitigations in place will address it, primarily again through focused offering and markets, and then making sure that we upskill the organization along the way. So look, in conclusion, I think Jumia has lots of options here. The option to do nothing is probably the most dangerous one. I think their recent financial statements illustrate that it's a challenge to try to eke out through pure cost savings, sustain profitability, because their top line revenue and their top line customer engagement is flat to declining. With that, thanks very much for your time. It was very enjoyable to do the case, and hopefully you got something out of sharing it. Thank you.